Hello everyone, George DeSantis here with a look at the market for the week ending March 1st, 2019. And as usual, we bring up a disclaimer. Where is it? Yeah. And the disclaimer simply advises you to be aware of the fact that I'm not a professional investment advisor. So if you need professional investment advice, you turn to someone who has those qualifications. I'm a psychologist. That's what my training is. So let's begin to look at some charts. We're going to look at the weekly chart of the S&P first. Here's a weekly chart of the S&P 500. You might recall from last week that I spoke about the fact that we have this resistance level here, this previous high. You can see it over here. Well, can't move the mouse like that, but you can see that the high to your left, it's 2815.15. So got pretty much this level, 2815.12. What happened is that last week we actually got to a high of 2813, and then we closed just below that, 2803. So we're bumping up that against that resistance. If we break through that resistance level, we are likely to make new highs. This was the previous high here, one of these anyway. This was the previous high, I believe 2940. So we get another 100 points on the S&P to get to that high, previous high. Now the other thing I like to look at is, as you know by now, the moving averages. So you have the 4 exponential moving average, the yellow line, crossing above the 9 here, and the 9 is that red line. These two other lines here, you could hardly see them. If I expand it, you might. Yeah, you see the magenta line and the white and the green line. The green is this 30-day weighted moving average, and the magenta line is the 50. And that's getting into the weeds a little bit, but in any case, the shorter term moving averages are above the longer term moving averages. The trend is up. We are a pretty good distance away from the Bollinger Band. The upper Bollinger Band is around 2900, which would be around the previous high here. So we'll keep an eye on 29, but we are 100 points from here to get there. If we look below at the other indicators, we'll see that MACD histogram trended up from below the zero line and is now in bullish territory. Let's see, Williams per centaur with a 30-day period crossed above this magenta line, 50%, or minus 50 to be exact, and back at this level here, and it has held above it since. So once that is the case, the trend is likely to continue to hold. The sum of the rate of change indicator is above 4% now, is at 5.31. That's another good indication that the trend is up. And RSI 12, since it crossed above this 40% line right here at this level, when it was at about 2596, the S&P, it's continued to trend up. Now it's actually breaking above 60%. It's at 63.86. So no argument here. We have an uptrend, and the question becomes, will we break above the previous high of 2815, and would we challenge this all-time high here of, I think it was 29 and change, 2940, I believe it was, somewhere around there. Okay, here's a daily chart of the S&P 500, and what we could see here, we have that 2815 line, that's resistance line, and we can see we came pretty close to hitting it here, did we? No, 2813 it was the high. So we came pretty close to hitting it, and then we pulled back and trended up a bit on Friday, and so we closed pretty close to the 2815 resistance level. We saw all that on a weekly chart. If we look below, we can see MACD has been trending down, but there is no classic divergence of MACD. I explained that last week. And we can see Williams per centaur, since it broke above since it broke above the 50% line here, or minus 50, it's remained above it. So we have a nice looking uptrend on the daily chart, and these other indicators are also looking bullish. Here's a daily chart of the VIX, and we've talked about the VIX before, and Larry McMillan keeps writing that we want to, when we see the VIX drop below 15, it's now at 1357, we could expect the market to be more bullish. And there we are, it's at 1357. Just wanted to show you that. Here's a chart of the new high, new low index, the spread between the new highs and new lows of the NYSE, I believe it is. And you can see that since we made this low here on December 24th, we've trended up and we have a nice uptrend here. So this confirms in fact, Alex Eller claims that this is one of the best leading indicators. And it did lead the market. He said when it crossed above minus 4,000, watch out, we are going to have a nice powerful move, and we did. Here's another chart of the S&P showing the impulse indicator. The impulse indicator is a censoring system. It tells us what we ought not to do rather than what we should do, according to Alex Eller anyway. He designed it. Right now on the weekly chart, we can see we still have a bunch of green bars. We still continue to hold green bars. You can see how the MACD been trending up here. And you can see that Williams percentile has been trending up. Actually, on some of the other charts, it's inverse. But in any case, we have green bars. The impulse indicator is saying you ought not to be selling this market short. Well, the first thing I'd like to do with the individual stocks is to discuss two stocks that I sent you emails on, and one of them was Applied Materials, AMAT. Then I followed this email up when I said I bought it with another email saying that I sold it. Let me explain to you why I sold it, if you want to know anyway. First, let's see why I bought it. I bought it because at this point on the Shaken Analytics software, there was still a good level of money flow. The money flow was still very good. It was becoming oversold, and it actually became oversold here. And all of these other indicators look pretty good. It was bullish, and the relative strength was pretty good. But then what I noticed was on the TC2000 chart, which I want to bring up and show you. What I noticed on TC, now I have two sell rules. The first sell rule is that if I have a stock on it and the 4 EMA crosses below the 9, which is the yellow line crossing below the red, I'm out, no questions asked. And the second rule is if it drops 6% below what I paid for it, I'm out, no questions asked. Saved me a lot of money. And this is what happened here. It dropped below the 4. You see, it trended up a bit for a day or so, and the 4 crossed above the 9, just slightly. You can't really see it here too well. And then it dropped back down below it. So I said, let me get the heck out. And that's why I sold that one. Now, PayPal was a different story. I liked what I saw here. The money flow was strong. When I bought it, it was oversold. It was about in this region here. Relative strength was pretty high. It was neutral, but that's okay. It doesn't have to be bullish or very bullish. And of course, it had a nice little run here since I bought it, and I had a gain. I had a nice little gain in it. So when it was approaching the target of 99.87, and I thought, well, I had too much of it. I had just too many shares. So I sold, great part of it, and then I kept 2,000. And then after another couple of days, it kept trending up, and I sold it. So I took that gain. So let's look at some other stocks. We're going to use TC2000 today, and I'm going to go from a list of stocks that I used to use, some months ago. And here's CRM, which is Salesforce, and you can see, looking at the trend lines again, you can see that the moving averages, I should say moving averages, the 4 is above the 9, 9 above 30. It's the kind of thing I like to see because I'm a trend trader. I hardly do any counter trend trading, you know. So I like this. I own it. Again, I think I bought it back a while ago. So that's Salesforce. Now here's Etsy. You heard me talk about Etsy many times. We used to follow it more closely, especially when I owned it, of course. So I was so smart that I sold it, and here's what it did. Now my friend Laura recommended this thing a year and a half, 2 years ago, and congrats to her. But I wouldn't buy it here right now. Perhaps I'll wait for a little pullback because it's sort of extended right now. It came in with very good earnings and just ran all the way up. So now it's at 72 and change. I would wait for a while. Here's one like Etsy, it's Stitch Fix, and it's one of those specialty retailers on the internet. And you can see this is another nice looking chart. It's trending up. You can see the lines, the moving averages above each other, and it was up 4% on Friday. Here's another name, DocuSign. Many of us use it on the internet to sign documents. You can see that again, the trend lines, the moving averages are above each other, the lower period to the higher period, and that's a nice uptrend. The one thing I don't like here is the MACD is now negative below the zero line, but other indicators are looking good. I don't own this. Here's Adobe. It's a daily chart. You could see once again the trend lines, you know, the moving averages are looking good. It's making a new high here, I believe, or close to a new high. And all these other indicators are looking pretty good. And here's a daily chart of Facebook. Now, I did buy Facebook again, and I'm holding it so far. But if it, you know, it's in a sort of a consolidation period here, or range. But what I notice is you're getting this Bollinger Band squeeze. So, well, perhaps I hope is not a strategy, but let's hope that it rides the Bollinger Band up out of the squeeze, and that would be nice if I continue to own it. The other indicators don't look bad. They're except for MACD in the negative territory, these indicators are still positive. Here's Visa. Visa has been trending up again. See, it dropped here with the rest of the market, but it's been trending up again. So I'll be looking to buy Visa back again. I haven't done so yet. And in the same area of the payment systems, here's MasterCard. MasterCard looks very well, very good. Look at the trend lines, the moving averages above each other, and all these indicators are looking pretty good. So MasterCard looks like a nice one. And the good old Microsoft is back in business again. Look at the nice uptrend we have. Again, moving averages well situated. 4 above 9, 9 above 30, 30 above 50, 50 above 200. Nice uptrend. Here's Intel. Intel has been getting some action again. You could see similar trend, the moving averages, how they're situated. And all these indicators are looking really positive. So Intel is one that I don't own, but I keep my eye on. I want to see what I could do with it. Here's a stock I used to own. I owned it for quite a while back here, I think. A Trade Desk. And it came out with pretty good earnings, and you can see this big gap up. And now, typically, it's consolidating this big gain here. So it would be a good time to buy it if it continues to consolidate like this, or especially if it drops down between the 9 and the 30 here. Here's one that I hardly ever own, but I bought it recently. Bought some shares. You know, it's a very expensive stock. Google. It's $1,100 and 11.48 a share, so you can't buy too many shares. You can buy some call options too, and so I like Google here. And lastly, stock I used to own, made some nice money with it, is Align Technology. That's a company that makes those plastic retainers for the teeth, and you can see nice looking trend. That's all the time we have, folks. So hope you have a good weekend, and we'll try and do some of this again next week.